Minimum downside to the S&P, maybe to 3,800 in the near term, as low as 3,460. So he's watching out for that. Any of that influencing the way you're viewing the market today?
It really isn't, Scott. I'm a long-term investor, and that doesn't mean that I'm ignoring the short term. Let me address some of the short-term indicators that were just mentioned, and I'll start with the VIX. Getting to 40 would be an extraordinary level. And I think it's easy for the professor to lay that number out there in light of recent levels. But it wasn't that long ago that if we got into the high 20s on the VIX, that would indicate a lot of fear. Go back to Thanksgiving of last year after Omicron broke, and that Friday after Thanksgiving when it was a really lousy day. I mean, the markets were off multi-percentage points. Oil was down 10%. The VIX got up to 35. And I just don't think that that level of fear is warranted. We all know what the Fed is going to do. That is not new news. What is new news, and I think is being underappreciated, is how well earnings are coming in. And I understand what I just said may sound controversial, but the basic fact is earnings estimates for this year and next continue to rise. And that's as simple as it is. As much as we want to talk about whether earnings are going to slow down or not, the simple fact is they aren't so far. Maybe they will, but this is not, this is not an economy that looks like it's slowing down either, not with jobless claims where they are, not with the ISM manufacturing survey where they are. So I want to sum this up, Scott. This is the most important point. You can invest with your heart or you can invest with your mind. Investing with your heart will tell you, oh my God, it's scary, the market's down, let's sell. That's likely to be the wrong decision. Investing with your minds is saying the forward multiple on the S&P is 17.5 and earnings are growing. This is a good time to buy.
So there's a lot to unpack there, and I want to try and unpack some of it for our viewers, okay? Earnings estimates are probably too high, right? So if you think that estimates are going up, I don't know how...
I totally disagree.
I don't know how estimates can...
I disagree.
Okay, well, let me finish, and then we can have a debate. I'm happy to do that. I don't know how they can continue to go up if you get earnings reports that suggest that revenue growth is slowing almost across the board. Right? And I'm not just talking about from big tech. That's been reported. Savita Subramani over at Bank of America calls this the end of euphoria. She calls this, and she's looking at the numbers, the weakest guidance and revisions since the second quarter of 2020. While consensus 2022 EPS rose 1% since April 1st, it was entirely driven by energy. So both their guidance ratio and their earnings revision ratio has now plummeted to the lowest since the second quarter of 2020. I feel like the numbers, Jim, are telling a different story and that you are in danger of doing what you said you shouldn't do. And that's viewing things with your heart and not your head.
Nope. So, okay, fine. I mean, here are the numbers. The IBES estimates continue to go up as of last week for the S&P 500 this year and next. And that's just a fact. I can't say it any other more way than that. As far as guidance goes, I'll grant you it's a mixed picture, but you've got to look through this a little bit, okay? For every Amazon, there's the airlines that are absolutely killing it. And all that it's saying is that the economy is shifting from stay at home, buy things, to reopening, get out there and travel. And even if you look at, say, last week in technology, sure, Apple's guidance for the next quarter wasn't that good. Qualcomm's was. It's a mixed bag. And when I look at that, what I look is Apple's second quarter, the forward quarter, is highly affected by China's slowdown, which we've seen over the last 2 years related to COVID, passes. It passes. It will likely pass quickly this time, and then we're off to the races. So you got to use your logic here. I'm not using my heart. I'm looking at the numbers. 17.5 forward multiple on the S&P 500, while estimates continue to rise. This is a good buying spot right here.